Hey guys, and welcome to the backtesting live stream. Today we will be backtesting our strategy here on Discord. And everything is recorded. I will share it later on right here in the data center under live recordings. And yeah, I'd say we get started right away. I'm not sure how many people are going to join because it's pretty early in the morning, but we will see. I am going to start anyway. Alright, so let me open up TradingView and we are going to backtest the strategy on the Euro FX futures chart. Alright, so we are on a 5-minute time frame. We go back all the way to the 1st of May. Now actually we do it a little bit differently. We start from yesterday. This makes it simpler and faster for me to go through. And we are simply going to hit the replay function right on 8:30. So now we can see the high and low of the day, or everything that basically happened pre 8:30. We drop it down to the 1-minute time frame, and this candle right here is the 8:29 candle. So we can simply mark out our high and low of the day, which is being highlighted by this box. We can also use the AZ to the soup tool, but I personally always prefer drawing it myself onto the chart. Alright, so we mark out our low of the day, which is going to be right here. Oh, it's already on the chart. This was the price action we saw during the live stream, so we can already take a look at it. I'm not going to do it again. So we open up, we have our high of the day right here, and we have sell side liquidity with those two equal lows. I'm always marking out equal lows because especially if they're hourly equal lows, because they are overall great targets for price to reach to. We had 8:30 news, and with this news candle we took out the high of the day, and with the very next candle we left behind a nice little fair value gap. If we keep on playing it, we see that we did not get an entry right in this fair value gap just yet. We formed equal lows, and we still have this hourly sell side liquidity below us, and also the low of the day for the London session. So if we take a close look, right now what we would like to see is a entry inside of this fair value gap, and ideally above the 50% level. So if we measure from the high to the low, we can see that the 50% retracement level is this little baby blue line, and our fair value gap sits right above that. So right now my preferred method of entry would be to find a interesting area for us that offers a great risk to reward ratio from an entry of this relatively big fair value gap. So therefore I would choose the 61.8 and set my limit order. We could set multiple limit orders and slowly add to our position, like for example this volume imbalance. There are a few more volume imbalances if we take a close look. The next one would be right here. Let me draw this out. We can also see that we are inside of a macro from 8:50 to 9:10. So that's a new hourly candle right here once we hit 9 AM. And yeah, we pretty much have everything lined up. This is this volume imbalance. We can drag it out to the left. Is also matching up with this little volume imbalance right here. So we could set multiple limit orders. I would set one on a 61.8 or at the bottom of this fair value gap. But then our risk to reward to those hourly equal lows isn't as great. I want to have at least a 2-to-1 risk to reward. That's why I would go for the entry right here on the 61.8 Fibonacci retracement. Here are the settings for the Fibonacci tool. And yeah, then we just wait for price to hit our limit order. We see we're inside this macro, the new hourly candle powered a move to the upside. We got our fill right here. We see we are starting to get some rejection of this volume imbalance. We can also watch price if you prefer to enter with a market order. This would be my market order entry. We've been rejected of this multi-time frame volume imbalance inside of our area of interest. Okay, nothing to be worried about. We've had our bearish rejection. Getting an entry right now, right here, would also work out, because what we would do is simply place our market order and have our stop loss 1, 2 ticks above that, targeting those 2 equal lows. And as we can see, price dropped straight down for a successful 3-to-1 risk to reward with a market order or with a limit order right here at the 61.8. Our stop loss being these highs right here. I wouldn't give it more stop than that or more room than that. We could also have placed it at this volume imbalance, since it's the only one that's really helping us out here within this distribution period, targeting as well those equal lows right here for a 3-to-1 risk to reward. So multiple different ways how you can get into this trade to capture at least a 3-to-1. Both of them worked out, even if you would have entered with a market order. As you can see, this candle formed, it's a 1-minute candle, and we engulfed the previous bullish one. So you could have entered already somewhere inside this fair value gap once you saw the rejection. But perfecting your executions is really the key, because this could mean a big difference between a 3R or a 1.5R if you get a late entry or something like that. So yeah, that's really what it comes down to. So this is our first trade. I'm going to leave it on our chart from Friday. Let me open up Discord to see how many people are already joining. 3 people in the audience. Let me quickly open up the chat. Yeah, here it's 9 a.m. So, invite to speak. Let me see how that is done. Show requests. You're invited to speak, Peter, if you want to.
Oh, sorry. I make a mistake. I thought that's a wave.
Not a problem at all. You can leave the stage if you want to. Alright, so this has been our first trade on Friday. Now we go back to the 5-minute time frame. And simply, let's get rid of everything we saw on Thursday and do it all from scratch. Hang on, I'm going to remove you from the stage. How do I do that? How do I server mute for now? Alright, okay. I don't want to kick you because then you have to rejoin again. That's all good. Alright, so now we are going to look at our price action on Thursday. Once again, we click the replay tool right at 8:30. We drop it down to the 1 minute. And simply we are going to mark out our high and low of the day. Therefore, we look at this gray area. Starting from the daily opening, our high of the day would be sitting right here. This is our high of the day. This is our low of the day. And only if we go above or below these levels, we consider taking a trade on the market structure shift. So this is our low of day New York. And this is our high of day New York. Alright, now we pretty much have nothing to do until one of these levels are taken out. We can simply wait. Yesterday when I did some testing on oil, I do not want to, or maybe, I can make a quick excursion. Let me drag that over here. That's our backtesting sheet. If I open it up in full screen and I open up the US oil chart and we just click on that first winning trade right here. Let's see. So we have our high of the day. Okay, now we don't see it there. Maybe this one. I had the idea of if we're really close to the low of the day, because I saw it happening quite oftenly on the US oil chart, on the oil future contract, that price, once 8:30 is open, tends to run or is giving a silver bullet setup towards either the high of the day for the New York session or the low of the day. And I think I just noted it a few times, and it might be worth looking into that deeper. So here would be a great example. We have our 8:30 high very closely before the opening where we consider taking trades. So we had this drop to the downside, and right here we also had a market structure shift for a run into the high of the day, because this is our target. That's what we pretty much want to see. And yeah, maybe it might also be worth taking a silver bullet setup before we look for our reversal setup. In the end of the day, 99% of the times it's going above or below the high of the day or low of the day, and most certainly we already know that right here we're only a few points away from taking out the high of the day with this rated to the upside, so we could consider taking a trade right here. Or if we look at market structure, we formed a low, and when we formed equal lows right here, we took them out. We had a bullish engulfing candle. If we would have dropped it down to the 30-second time frame, maybe we would have received a fair value gap entry right here, or we just enter in the continuation move with our target in mind. This is the next buy side liquidity that we are going to target, our 8:30 high of the day, for a nice little 5 or 10 points move to the upside, also inside of a macro. And this would be the silver bullet setup that I would prefer, especially around this new hour. This is actually the perfect setup. Let me see if I can find another one. Let's pick a random trade. Also, high of the day. Here we have our 8:50 to 9:10 a.m. macro. We see we consolidated right as soon as we took out, as soon as we started to enter into our session at 8:30. Consolidated, shifted market structure with this massive bullish candle. Where would be our target? The high of the day for the New York session. So this keeps up repeating, and I just want to point it out because I know we have a few good traders in our community who are enthusiastic to test a few different things, and yeah, it might be worth it. Let me know what you think about that, because I think we could really be onto something here. Alright, so I would say we continue with our Euro FX futures chart, and also keep an eye on that, what I just pointed out, a potential silver bullet setup between 8:50 and 9:10 towards our lower high of the day, because right now we can see our low of the day is only a few ticks away from this little consolidation. We open up with this bearish candle right here, and we can see right now what target would be closer. I know this is not really a sophisticated approach, but that's 25 ticks and that's 60 ticks. So what is easier? What's the easier target that price can reach for? It would be the low of the day. And with this momentum shifting candle, a quick scalp into that direction with our stop loss being above, our take profit target being below, that's 26 ticks likely. So as we can see, we wait. We're now inside of the macro. We form equal lows. We pulled back into the fair value gap, but we did not take out the low just yet. And here we go. So this would have been the trade. We could have also gotten another entry right inside this bearish fair value gap. But this is not the strategy. This is just something I noticed over the time. So for example, an entry right here could have also played out nicely inside this bearish fair value gap, with our stop loss being one tick above that. We would use lower risk for that, and maybe have another position inside this upper fair value gap in case price is reaching for that. But just nice to see it playing out. I also want to keep track of yesterday's low, but there is no previous day low. We already took that out right here at the beginning of the Asian session. So right now, all we're going to do is look for a potential bullish reversal. We are going to keep an eye on the market structure. And right here, I think we shifted market structure. We formed lower lows this whole time. So the highest point between low number 1 and low number 2 would be this level right here. Market structure shift bullish. And we have a fair value gap left behind. Bullish fair value gap number 1, and also a volume imbalance. Alright, and other than that, not much else. So we got our retracement already with this little rejection wick. So first of all, we would have measured our optimum trade entry things. Let's see if we get another entry inside of our optimum trade entry. Right here, we touched the 50% level, which is also inside of our fair value gap. So I would have simply placed my stop loss 1 or maybe 2 ticks below this low, targeting a 3 to 1. This a 2.5 would be the first extension. We have 3 equal highs. Also note them from our silver bullet setup below the equal low right here. So I would consider this being buy side. Let me quickly change that to a black font and save as. Come on. Buy side, there we go. Yes, I want to replace it. Alright, so our buy side target would be right up here. This is a 3 to 1 risk to reward. Let's see how this would have played out. And we had our take profit target. We're done for the day. Nice setup, market structure shift, strong displacement, pullback once we took out the low of the day. Alright, this is another 3 to 1 risk to reward. We can see also during the macro 950 to 1010. Let's watch the rest for the day. The next macro 950 to 1050 to 1110. Pulled back inside of these fair value gaps. Let's see if we're going to take out this low. This is already way past our session. I wouldn't keep that trade open for this long, but our max risk to reward ratio maybe would have been those equal highs right here. We had this fair value gap. Could have been a 5.5, but we would have only hit a 5 to 1 risk to reward only. Just. If you have any questions about this trade, feel free to ask me. Now would be the perfect time. Yeah, I did not know this is working, man. That's, yeah, shocked me when I saw it this morning, and I had to make a video about it. Also to show my friends who are pretty much doing it the same way I've been doing. Alright, so let's continue, and this is our second trade. The second winner of this week, if we go back to the 5-minute time frame. This is Thursday, so now we go back to Wednesday. We mark out our high of the day on the 1-minute time frame. Once the first candle hits, okay, so we have our high of the day. And now we could also consider taking a quick scalp. What I pointed out earlier. In a sort of a silver bullet setup before we even get the chance to trade our reversal setup. So this is the New York low of day, high of day. Alright, so 8:30. What do we see? I'm just going to keep on doing this. We are in a bullish fair value gap. We have lots of whips right here. If we measure from our high to our low, we would now be below the 50% level to reach above the current high of the day, which is very likely, generally. And what else? Yeah, no, nothing else. So we can keep track of that and see if we continue further down. We hit our optimum trade entry. We want to see a nice rejection from this level to consider taking a long, not just, yeah, okay. So we got a nice bounce of it. It's worth a try to me. We could place our stop loss at this low and target a 1.5 risk to reward. The risk to reward ratio on these trades will never be the best, but it might be worth the risk. We're now inside of the macro. We're just consolidating that we had news on this day, and we would have been stopped out. By this time already, I would have maybe disregarded the trade and closed it around break even. Unfortunately, this didn't play out, but we're still testing. We also broke below this fair value gap, this bullish fair value gap, and then kept on holding it as resistance. This would have been an indication for me that we should maybe exit this trade. I'm just testing it as I'm doing this back testing to see if it's going to work out or not. Alright, so we keep on playing until we either break the high or the low of the day. We keep on pulling back further, further, and further. Our low of the day is also not too far away anymore. Also note that like I said, we are going to experiment if it might be worth it to keep an eye on the London high of the day. So we could call this the London session high. London session high. Top. Might be worth to keep an eye on it, especially if we get a run up above it, a pump and dump setup. Okay. London session high. Because as we can see, we had this pump and we never got above this level again. Market structure shift would have happened right here. It wouldn't have presented us a nice entry, but it might be worth keeping track of a session high, which would certainly be this 4 AM high. Let's keep on playing it. It's 11 AM, so we would actually not consider taking any trades. So this would be a no trade day in the end of the day. Let's see if later on we take out the low of the day, or if we're going to stay inside of its boundaries. And by that time we would have very likely had a setup on the S&P 500 if we swap between the Euro FX futures and this chart right here. Alright, so no trade day. We go to our next day. This would be Tuesday. So we have our low of the day right here with those two equal lows already taken out. This would be our New York low of the day, and our high of the day is sitting right up here from the Asian session high. We haven't taken it out during London, so if we're looking for a reversal, this could be an interesting point. New York high of day. And our London session high would have been 2 AM, yep. London session high. Alright, so could this have been a silver bullet setup? Yeah, maybe. We shifted market structure once we broke this leg. We pulled back inside of a little fair value gap. If we have a close look, this would be our target. We even had equal lows. This is what I was referring to earlier. That if we are very close to our low or high of the day and we get a potential setup, for example, we have lots of whips right here, also a fair value gap. We shifted market structure very closely to our 8:30 opening, where we usually see some momentum, depending if we have news or not. So we had a pullback. We're already from this little pullback right here, inside of this area. Shifted market structure, had a new lower high being formed. Even though this area right here theoretically shifted bullish, we shifted bearish again, right here. Once we broke the most recent higher low. Shifted, we had a fair value gap to enter on. Right at the open, targeting the sell side for a quick silver bullet trade, I would call it. One tick above that. 1.64. If you would like to always go for a 2-to-1, you could also do that and let it run. I hope you guys get the idea. Does this make sense to you? Or what do you guys think about it? Of the session indicator, the high and low of the session will automatically be measured. Because I like to, I don't know, I created the Turtle Soup tool to make it easier, but I don't really use these tools myself. Especially if I come to the New York session prior to 8:30, I map out my levels. I look at the chart, and by looking at the chart, I It's like writing down something on a piece of paper. If I write it down, I remember these levels, or I already create my map of what's happening on the chart instead of just having an indicator with a few different lines there. If I looked for the London session high myself and the New York session high, the low of the day, I roughly know where everything's sitting at. So there's sometimes I use indicators and sometimes I also don't. It pretty much depends on the use case. So we monitor the low of day and high of day until price react on those levels. From what time we should start watching and what time we should stop. We monitor the low and high of day before 8:30 a.m. New York local time, starting from 5 p.m. of that day before, according to New York local time. This is when a new daily candle opens up. And then we watch for a trade between 8:30 and 11. I also, if we go to, let me quickly go back from replay mode. Yesterday when I did the testing on oil and also the S&P, we have this last macro right here between 10:50 and 11:10, also nicely around a hourly opening. So I think that's where the main idea from those macros comes from. If you remember our hourly turtle soup setups, if we have a close look, it didn't play out here, but what we would like to have seen is our hourly low right here being taken out by simply ticking with 1 or 2 ticks below this low, triggering higher time frame traders into a short position, and then trading based on that market structure shift into the long direction, having these higher time frame traders basically trapped in a short position. But we didn't get that here, so I might even consider taking a trade. If we get the market structure shift or a big liquidity grab between this macro, I would still consider taking a trade. But this is to be tested. Alright, so we go to Tuesday. That's the day where we left off. Go into replay. We took out the low of today, and now we would wait for the market structure shift to happen. Currently, our most recent high would be those levels right here, so we hope we get a better structure below this level. So we formed a low, we did not break this low, we formed a slight short-term high, we broke that one. We had our pullback, not having shifted market structure just yet, would be this level right here. Okay, we broke this level, so our most recent lower high would be this level. This would be our market structure shift level as of right now. We keep track of the lows now, so we track them going forward. Alright, so we see we did not break this low. We shifted market structure, closing above this level. We had a turtle soup setup, everyone. No, we did not. Okay, very close. We almost got one. Right here we had this 8:50 to 9:10 a.m. macro, and we did not go below our hourly low right here from 8 until 9 a.m. New York local time. The low being this level. Unfortunately, we did not see a wick below that. This would have been a nice liquidity grab. Alright. Some people would already consider this a market structure shift, but I look at the bigger picture, or most of the time sometimes it's rough and it depends on the person who's doing the analysis. So it's great that we have a community where we can, if we trade it live, we can point it out. Okay, market structure shifted already. Let's say someone considers this a market structure shift. It would be on a map for everyone. So let's see, we shifted market structure just here. Let me mark this up, market structure shift bullish. And we can quickly measure our range from our high to low. This seems like it could be a significant high. Since we already got a pullback, we start drawing our fair value gaps right here and right here. We already got a rejection of this first fair value gap, but it's not below the 50% level. This is where it becomes tricky, because this could already have been a retracement and now we continue to the upside. So the question is, where we're going to enter ideally. For me personally, I would place my entry order right here, or I would just wait for a rejection of a significant level that I just drew out. Alright, my stop loss would be 1-2 ticks below this little low right here for a rejection of this fair value gap targeting a 3-to-1 risk to reward. Let's see. Alright, so we got filled with this move here. We already continued forming higher highs and higher lows with this leg to the upside. Our fair value gap kept on holding support. We did not open up or close below this level. We even hit our optimum trade entry, which would have been down here, 1 tick above that, for an even higher risk to reward ratio. But we are fine with our fair value gap entry right here. Let me draw this out. I was a little bit scared that we already got a rejection of this first fair value gap, so what you could do is add a contract simply right here. But ideally we want to see our entries right at the 50% level or below that. To play it safe, I prefer placing it right at the 50%. Let's see if we get our take profit target hit and our 3-to-1 take profit target just hit. Very simple. Also inside of a macro, we took out pretty much just the sell side for early longs, taking them out. We had a little volume imbalance here. That's just nice to see on the Euro FX futures chart. And I think ICT also just started uploading FX videos again. And at least the Euro US dollar chart or the main currencies, they have been performing more nicely recently, and I think that's also why ICT is now covering them in his trade recaps or in his forecast for the Euro US dollar, the same way he's done it with the S&P 500 futures. So yeah, I think it might be the point in time of the year where we do not have to disregard FX currencies for great ICT setups. So here we have a VIP. We kept on holding support on that. No proper fair value gap, so this would have been our main area to look at. We could also treat this as an order block right here because price dumped down. And from this level right here, so very likely they had active shorts going on to push price back below the 50% level, which is considered discount. And so just imagine there are active sellers pushing price to this level, and then to basically buy up all these orders right here at a discount to basically get an entry below the 50% level, which is considered discount. So to get down to this level, they had to actively short. So they had to press the sell button. And to mitigate these shorts right here, after engulfing this move, they want to come back into this area, this little order block, where they had active shorts to push price into discount to basically close out their shorts before price is continuing into the opposite direction. I hope that makes sense. And yeah, here we have our third 3-to-1 for the week. Let's see how this trade continued to play. My exit would have certainly been this market structure shift. Right here we formed a high, low, low. No, this would be the market structure shift, which is also perfectly lining up with our 3-to-1 risk to reward. I would even consider just taking a 2-to-1 risk to reward. It's powerful enough to, even with just a win rate of 50%. But yeah, alright, this is our third trade, third winner this week. Let me see if there are any questions on Discord. Yes, invite to speak. I believe one of them would be 7 to 2 for the levels, and then from 2 until 5. Yes, that would be the London turtle soup, or whatever we want to call it. There's not really a name I have decided yet, or decided for yet. Let's call it a ICT style setup, looking for a reversal below or above the high of the day. Alright. Let's see. Let's continue and move over to next day. So this is Tuesday. We had a winner on Thursday, Friday, and Tuesday. I also haven't got. Good morning.
Yeah, well, just that's in my mind.
All right, so let's continue with that next setup right here on Monday. Right here, from just looking at it, we can see that our previous day high has not been touched. We have equal highs at those levels. So if we would be coming to the chart, just looking at price action like this, we would see the Asian high right here, also at the previous day's highest level. We would mark this as our previous day high. And let's look for the high of the day at 8:30. Also going to be this high. So we have a nice little confluence, previous day high slash high of day New York. Let's add our little America flag here. So double confluence. And now going into, okay, we might not get a scalp here like we got on those other days where we tried to catch a silver bullet above our, very likely, the next draw on liquidity. If we, for example, go to the charts already at 7 and keep watching, we would have seen a market structure shift happening right here with a strong continuation, very likely into our next buy side liquidity pool, which would be the previous day high and the current high of the day for the New York session. Still testing it and see what we can do. We could also enter off a fair value gap right here because this is very likely going to be attacked very soon. Let's see. No, okay. We took out this high and now we would look for a market structure shift to happen. I would say we give it 2 tries max. If the first one fails, I would also lower my risk. The goal would be just to make back what we lost on our first trade and end the day at break even. Not trying to be greedy and going for insane levels. Trying to pass a challenge in one day. Okay, let me keep track of structure here. Low, then we found a high. Would we already consider this as a new low? No, not yet. Okay, yeah, right here we shifted at market structure. We took out the previous day high. This would be our market structure shift bearish. Would we have had an opportunity earlier? We could almost consider this as our market structure shift, even though it's a close call. We formed a new higher high, had our pullback, and formed another higher high, had a pullback, but then we did not form a new higher high, so we could actually consider this our market structure shift. We already took out these equal lows. Break of structure right here. So right now, what are we doing? We are looking for simple fair value gap entries right here and right here. Use our Fibonacci tool from the high to the low. We do not know if that's going to be the displacement leg low. The displacement leg is the leg that shifted market structure, by the way. Let's see. Nope, we continue to drop straight away. Let's see if we get a pullback here. Would this still be a fair play? We just filled this fair value gap where we reacted from to take out our buy side liquidity. I'm not sure. I would have preferred an entry right up here. Let's just keep it going. So our swing low right now would be right here as we're starting to see a pullback happening. Our 50% level would line up with this fair value gap. Might be worth the short. So what we could do is place our limit right here at the 50% and our stop loss. So I wouldn't place my stop loss all the way up here. This would be just too big of a stop loss. I would prefer splitting up my risk and trying it 2 times in case this fair value gap is not going to hold. So I would place my stop loss 1 Yeah, one tick above this high right here, that candle that created the fair value gap. And see how this can reject price, targeting the same low. And if we're breaking above this level, I would try an optimum trade entry with my stop loss 1. No, we could go for the previous day high as a stop loss, also targeting those same levels. Let's see how that plays out. We got our pullback and our first limit order would have already failed. Let's see if we can continue further. All right, so what could we do here? We went above the 50% level. We did not, well, we could look at it as a inversion or support. Our right here from this move to the upside, support turn into resistance. That's what we could look at. We saw this little rejection right from the 61.8 level and then a followed bearish candle, but we didn't engulf it. Getting an entry right here would also be risky and not ideal anymore. What do you guys think?
Can I say something?
Yeah, of course.
During the backtesting, I noticed that a lot of the times, if I'm using the 0.618 optimal trade entry, that it gets hit and it doesn't retrace further than 0.79 or maybe a little bit higher. And if it would retrace higher than 0.79, the trade would probably hit stop loss. So I tend to use the entry of the 0.618 very often, and then pretty tight stop loss just above, like maybe 3-4 ticks above 7-9 level, and then you got a really tight stop loss with a pretty often perfect entry, I must say. Also on this occasion, I remember I'm looking at my backtest from yesterday. I took the 618 and it just got perfectly hit. You see it here now.
Yeah, no, that's great. That's what we can also use. I also just know that this fair value gap that we kept holding as support, pretty much the only one inside of this last leg to the upside other than all these gaps, which also kept on holding resistance once we cut through it. But yeah, but when we're trading this live, we could talk to each other and see, okay, where would be the perfect entry point. Of course, just setting a sell limit order at the 50% level, I wouldn't really feel comfortable with that, especially since we already had quite a significant drop. So I would rather watch price. Okay, we got a rejection of the 50%. Okay, we watched for one more 1 minute candle. It's not that we're waiting for 5 minutes anymore. And we saw this rejection from the 61.8. We could enter on the close of that candle, place our stop loss at the same place, 1-2 ticks above the high of our rejection candle, and target our low, which played out. Or if we really would have missed our trade, we could have also tried to get in on this little rejection wick, place our stop loss 1 tick above the high of the candle that created the fair value gap, also target a 3-to-1, which would have also hit our risk reward ratio. So I think we can also count this trade as a winning trade. I think I also said it on the backtest on the S&P 500. The stats right here, if I open them up, they are pretty good. I mean, the gain on account 20% over 4 weeks, not having many losing trades at all, but that's backtesting. Catching every setup like this live, it could easily happen that, I don't know, we just missed this setup, or that we take our entry right here, or that we would have been waiting for an optimum trade entry and you might have missed it and some other members on the Discord actually caught it. So those results for me.
So you chicken out of the trade, like.
Oh yeah, exactly. So yeah, I would refer to those results as ideal best case scenario results, but of course there are going to be some mistakes on the way, like maybe you didn't place your stop loss, or you already trade your stop loss because you have been scared, you chicken out of the trade whatsoever. So those are best case scenario results for me, and they're good enough to for me to mess up a little bit of that win rate, even if it just goes down to a 50% win rate. Win rate at a 3-to-1 risk reward, that would still be good enough. If we would be looking at a US oil 46% win rate, this would not be as ideal for me, to be honest, to trade with, because if I screw up a little bit of those results and have a lower win rate than that, would still be profitable, but not as profitable compared to the S&P 500 or very likely the Euro US dollar, because that's, I think, on TradingView, our third, if not even our fourth winner this week. Of course, best case. So let's see. Let's use this rejection wick. 1, 2, above the optimum trade entry, or we place it right here. Doesn't really matter. Take a 3, 2, 1. Ideally target these lows, and we're done. Alright, let's see how the rest played out. I really like the confluence of those equal highs from our previous day high, the Asian session high right here at 9 p.m. And we also have been inside of a macro, if we have a close look. Right here, this would have been our macro timing. We would have liked to see our reversal or our continuation short. So that's also lining up. Pretty high confluence. Our first extension of this displacement leg, measuring from the low to high, would be down here. Let's see if that also would have been hit. Sell side liquidity below this low. Yeah, a bunch of sell side liquidity to the left. Okay, right here we would have shifted market structure. Then we hit our first extension. We had a pullback. Always these sharp drops to the downside with immediate buybacks. But yeah, we eventually continue also to hit our second extension. But that's not the goal. We are happy with a 3, 2, 1 risk reward.
Yeah, I would never dare to keep it up like that, especially with a funded account where the drawdown trails.
Exactly. Yeah. Alright, so that's Monday. Let's quickly go out of replay mode. So we had a winner on Friday. On Thursday, on Wednesday, we had a no entry trade. We did not take out the high or low of the day, unless we look at this London session high from now on, but I think we're just going to leave that out. It's nice to keep track of it, but
it was also at 10 o'clock, between 10 and 11, you have to check, was a silver bullet trade, perfect, lining up between 10 and 11. Let me check if I have it. Oh, no, I do not have the link, but yeah, it's not hard to see, because you know that it's going down because it already took the liquidity on the upside.
Yeah.
And then between 10 and 11, there was a beautiful fair value gap. I think it's
10 and 11. I think this one right here, right on the new hourly candle, filled.
After 10, we got the entry.
Yes. After 10, we got the entry right here on this fair value gap.
Yeah, that's the one.
This would have been it. Filled in perfectly, continued further to the downside. Yeah. But ideally, I would have liked to see that match up with a sell side liquidity target. Yeah, we could say that. Right here we have equal lows that we haven't taken out with this low right here. This could have been a potential target. We have more equal lows right here. And a fair value gap below that. So plenty of equal lows, even though it's just a 1 minute time frame, and 2 fair value gaps that eventually have been filled. So yeah, a silver bullet short into this area of interest, let's say at the 50% of the fair value gap. Or again, we could simply measure our high to low and see, okay, 61.8. Could place it just 1 tick above that max. We could also place it 1 tick above the candle that created the fair value gap, but let's be realistic and use at least a few ticks of our stop loss, and yeah, target our low or the midpoint of this fair value gap, or just a 3 to 1 risk reward. Yeah, nice silver bullet setup, that's true. Let's leave it on the chart. Alright, I think this week we had 4 winners, so that's a total of 12R. Let's say That's the best case. Worst case, we would have maybe missed one of them, because I think we could have caught at least 3 of them. I think this was pretty easy. I think we also got our 61.8 entry here, which was just at the bottom of this fair value gap. What would you do in this case? Would you just place it inside of the fair value gap or at the top of the fair value gap, or be very strict and place it at the 61.8, even though most of our fair value gaps are above that 61.8?
Well, very often you see that it just retraces a little bit more than the fair value gap, and that's what I said. I'd rather miss a trade that needs a very large. If I would have taken it, it needs a very large retracement back to the upside. Then I rather wouldn't be in it and miss the trade, or just have the perfect entry, and then or like the up move doesn't have to be that large.
Yeah, fair enough.
Thinking.
What we could also.
So in this scenario, I placed it also here at the 0.618 I see in my backtest.
Okay.
And, but this, to be fair, I checked why did it jam up like this, the retracement? It was news at the 45, I believe.
I think what we could also look at, I pointed that out on Discord too, that I'm going to look at rejection wicks. I heard ICT say that wicks do the damage, and usually the body tells the story, exactly. And that's what we could be arguing here. We saw we closed inside of the fair value gap, we hit the OTE, we hit the 61.8 level, and just trade based off this rejection wick. I think over in the DR Academy, where they trade the DR IDR system, they also enter based off rejection wicks from specific levels. And I think we could use this approach with our entries as well. I think we already had an opportunity. Let's go back to Monday. Did we see it there? Oh, come on, my computer is exhausted. Recording, streaming, and trading the open at the same time. Might have to upgrade. Same here. We had our push up above the fair value gap. Unfortunately, we closed above it. So if this body close would have been inside the fair value gap, that would have been even better. But we also had that 61.8 rejection wick. Pretty similar to what we have right here. We shot above the previous day's high, or in the high of the day for the New York session, with a wick that's almost bigger than the body of this candle, which could also be a sign once we shift market structure to just enter with the market structure shift. I know one guy on Twitter who's pretty much trading a very similar approach, also based on reversals, and he used to enter on retracements and fair value gaps. But I think I just saw him switch recently to enter right on the market structure shift. It's not all the time it's the ideal entry. It's depending on the structure at the market structure shift. So
exactly.
If we look at this
one, structure shift is very low. Like if you would have must be using the dotted line you have there below the market.
Yes.
Shift. Yeah, then you need a very large stop loss to cover it. And it has no use.
Yeah, so if we look at this right here, getting an entry above here would be pretty much useless. So we would then start to look for a retracement lower into our optimum trade entry. But if we get a setup like on Monday, where first of all we had this rejection wick above the previous day high and high of the day, and we had a very narrow market structure right here. So some people would start drawing those little wedges or triangles that are getting closer and closer together right here if we just consider the bodies. We had this last push above the previous day high of day. We shifted market structure, getting an entry right here with our stop loss. One tick above that would be fair, targeting a 3-2-1. And then maybe adding to your position on the pullback or already securing partials. We will keep an eye on that.
But it will be, if this is a losing trade for a funded account, that ruins your drawdown at this point.
Very true. So it might be worth to target some sales side liquidity already on that market structure shift. It depends on the setup. We will have to keep an eye on that. The system can always be improved. So that's the first week on Euro US dollar. I think very similar to our week on the S&P 500 where we basically just could have had wins. I know in the live stream we didn't catch all of them, like the one on Tuesday. No, I think Tuesday we caught, but Monday was the one I missed with this market structure shift right up here because I really wanted to see it go above the 50% level. We had a little fair value gap here and a fair value gap here, but we didn't touch that 50%. I still counted it as a winning trade because we reacted from a bearish fair value gap and continued to drop further into sell side. We had this pump up, market structure shift, and right here, this would also be a good example for a market structure shift entry. We had our drop and continued further to the downside. Yeah, I will definitely keep an eye on that. All right, let me close these tabs quickly and continue with our
Maybe
next.
you add an extra column with would a market structure shift anti have worked, yes or no, and then maybe we can check.
I will write that down. I will fill out the Euro US dollar backtesting sheet afterwards, but I will add this column. Insert one column left.
I also had the max RR. I'm not sure if it's usable, but if we often see that like in 80% of the trades we have, I don't know, 4 or 5 R even, then we could even be bold and just aim for that.
We can do that.
That needs a lot of checking.
Yes, especially with that trailing drawdown. But let's see.
It can ruin your whole trade in a day.
MS entry. Yeah, I'm going to do that later. Alright, I've got it on there. Let's see. Let's continue with the next week. Alright, this is Friday. Let's check that one out. Well, we can already see just by looking at it. We took out the previous day's low during London. So this could have been a potential London setup. No. Asia. We did not go below this level again. Alright, let's look for our low of the day. It would be right here. New York low of the day. And our high of the day already taken out would be right here, this high. So here a silver bullet setup above the high of the day wouldn't have worked out because there's almost no space between. Let's say our high of the day would have been somewhere up here, all the way from the left, maybe a London session high, forming our high of the day, and we see this little bull flag pattern with this bullish momentum to the upside, filling a fair value gap now, right here at 821, targeting our high. Probability is pretty high that this is going to be our next draw on liquidity, which would also be very simple and repeatable. All right. Let's see if we get our first losing trade. So we pushed up higher. Let's keep track of market structure. This would be our low. This is currently our high. All right, so here a market structure shift entry wouldn't have worked for me personally because there's quite a big distance between our most recent high and low.
Yeah.
But we shifted market structure bearish. We left behind fair value gaps to enter on. For our first bearish one right here. You already know what's happening because you've done the backtesting.
Yeah. I'm really curious about this week you're gonna do. So
We have buy side inefficiency as well. So, but I'm not going to mark that up. I'm going to note this little volume imbalance right here, since it is in the displacement leg. Volume imbalance right here. And one right here. And one right at the top. Double volume imbalance. I think those should be all important levels that I would also draw up on a live chart. Let's see once the retracement starts. Good question. So we start from our swing high. Our 50% level would be right above here. Our 61.8 would line up with this fair value gap. I would continue looking at this displacement leg like this. Alright, so yeah, we already took out the sell side, which would have been our first target. So I guess, yeah, well, there's always an entry opportunity with some ICT concepts. Even though we didn't get our retracement entry, we could have looked at our most recent higher low, which shifted market structure in terms of a support area that has been flipped into resistance, which lined up with this fair value gap. We got our rejection, pulled back for the continuation move into the sell side. It's not the highest probability setup, so it might just be worth to pass on it and not take this trade.
Would you call this a breaker block?
Yes, that's what I would call a breaker block. Old support theoretically turn into resistance. This would have been the only possible entry opportunity for us here into the sell side, unless we reverse back up, but this wouldn't really be the target. Let's see how the rest played out. I'm not sure. Yeah.
Could you check the 5-minute time frame?
Yes.
And then maybe, yeah, that 5-minute breaker block. Isn't that more because order blocks on higher time frames are more robust than, of course, on a 1 minute, I think.
Yeah, 100%.
So this is a nice order block turning into a breaker block, right?
Yeah, we could say so. We had this bullish fair value gap right below it, so ideally, yeah, we would like to get our entry at least above the market structure shift. That's the bare minimum that we're looking for. Of course, we could also look for this act as resistance to get up high. I'd say it depends on what we get prior to our market structure shift that we could also look at specifically, because here we had quite a pump to the upside, starting all the way from down here, a small little higher low, and then we continued pushing to the upside. Unlike
realistically, if we would have been trading this live, for instance, yesterday or so in the session, I would have been scared to enter there because the up move was so strong. So I would be anticipating a big retracement at least.
Yeah, but that's the thing, we do not always get them, and might be worth to have a little tool in our toolbox to also profit on these type of trades. So let's say our entry would have been right at the fair value gap where we shifted market structure. Our stop loss max would have been maybe 1-2 ticks above that level, and then but that's the problem. We could split up our risk and grade it as a, let's say, a B setup. Our A plus setup would be right up here around the 61.8 and the optimum trade entry, where we use 0.5 or maybe even 1% of our risk if we get that setup. And if we get a breaker block right here, we could say we only risk 0.25% as a B graded setup. And we could also choose to ignore B setups and only focus on A plus setups, which would be above the 50%, ideally inside a fair value gap around the 61.8.
But if you now click on the order and then create limit order.
Yeah.
Yeah, and then in backtesting
it doesn't work.
That's true. Because I'm curious if you can even with a 50k, if you can do a 0.25%. Yeah, probably you can, I think.
Yeah, I think that should work.
Of course, on your stop loss, but
yeah, of course. 7 ticks. Yeah, that would be interesting. Otherwise, we would have to go on the micro, but I really want to avoid going on the micro.
Actually, that the wicks were bigger on the micro.
Yeah. I used to trade a similar setup on my funded account with Apex, but at the beginning, when I tried to work with Apex and trying to pass the first challenge there was that one setup where on the main chart that I was tracking the whole time, we didn't get that last liquidity grab, but on the micro chart we got it, and that actually hit my stop loss. And I didn't watch it. I didn't watch the micro chart. I watched the full contract chart. And all right, I hit my take profit. I switched charts and I saw, where's my order? It was completely gone, and then I stopped looking at the micros.
Oh, yeah.
All right, so I think it might actually be worth it. I'm going to note it here. And breaker. All right. Otherwise, this would have just been a no trade day if we wouldn't have taken that B grade setup. But overall, we could look at potential sell side for a silver bullet maybe. But yeah, pretty strong up move, and of course we have some equal lows that we could target, but let's see how the rest played out. I think we just continued to drop from here.
I think this is just one of those days where the retracement didn't come.
Yeah.
Probably on that day we look at the Nasdaq, we look at the ES and
yeah.
probably find an entry over there.
Yeah, I remember this day because we had the little turtle soup set up here right inside of this macro. That was last Friday, where I also waited for this retracement. It didn't happen, so I didn't get the entry. We continued further down, and then we had the news event right at 11:10 or something, or because this can only be a news event. I'm curious. I'm pretty sure it was, and then we had this little turtle soup setup where we took out our previous hourly low right here, reversed immediately from it, shifted market structure, but never came back.
Yeah.
Quickly targeting the high of the day, and once we took it out, we got a rejection wick. We got a rejection here as well, but we didn't take out the high. We closed bearish. 1-2 ticks above that, targeting a quick retracement into a fair value gap, already a 2R. Let's see, there's the next macro. Basically just went sideways after this big pump. Because I think they achieved their goal for the day, very likely with this last push to the upside, from the low to the high of the session.
Exactly. Interesting why instead, because what I remember from ICT, or the way I analyzed and interpreted this, is that news is just an event to drive price whatever way.
Yes, 100%.
Dependent on the news, you couldn't say, oh, it's going up or down. It's just reaching for liquidity. That's it.
Yeah, exactly.
It's interesting to see that it's going up instead of down, because there's a lot of sell side liquidity on the left side below it.
Yeah, I think so too, but let's say most of the traders right here that already got in through London have been long in the market, and they are very likely have traded their stops with them. Let's say maybe to the previous day high or something, or the previous session high. And then with New York, they try to work these stops, taking them out step by step, and assuming that many traders already got into the short movement, also trailing their stops at these highs. I think it might have been more.
Not anticipating a reversal at this point.
Yes, exactly. They anticipated maybe a pullback for the continuation into the low of the day, but not a 1, 2, 3, 4, 5, 10-minute reversal back to the high of the day. I think that would be fair to argue. And we also have our liquidity run inside of our macro with our hourly turtle soup setup. So here we could have stacked Confluence, but of course it's news and we really never know.
Yeah, personally I wouldn't have traded it indeed, because I have no idea what it's going to do. So
yeah, 100%. All right, let's go back to Thursday.
I'm making my breakfast. If the sound is annoying, just let me know and I will.
All right, no worries. All right, so that's Thursday. Yeah, that's what we wanted to look at. Our low of the day, sitting right at this level. Breakfast sounds like a delicious idea. I haven't had breakfast yet.
I gotta go to the KLM Open in the Netherlands in
Okay.
half an hour. Gotta get ready.
So let's see. This could have also been a potential play. We had our equal lows, low of the day. Do we have our previous day low? No, that already has been taken. No, let's ignore that. We just wait for market structure. We broke our low of the day. We formed a new lower low right here. Right there. Formed a new lower low. Now we're inside the 850 to 910 macro, so we can keep an eye on that. That's our market structure shift. Did we break these equal lows once more? No, not yet. This is our most recent high. Market open, drop below those lows. Most recent high would be those two equal highs right now. Getting closer and closer to the market structure shift maybe. Continue to drop. Now we're in the 950 to 1010 macro. We formed a lower low since then right here. So our market structure shift would now be this high. So we can also look at a potential hourly turtle soup setup. If we take out our previous hourly low, let's see. So now the new hourly candle opened up. Pulled back down, but we didn't grab liquidity during that macro. Equal highs, yep, let me straighten this up. No market structure shift yet. Perfect, no market structure shift, no entry for us. We took out our previous hourly low. Let's see if we can continue. Highest point for the market structure shift is still this level, now at equal highs. Ideally, we would like to see a lower level than that. We broke our low again. Looking at this level right now. We broke it once more. It's an almost 1050. So we're inside our last macro where we would consider to take a trade. We found our low right here. The lowest point between, yeah, would still be this level. Though I would consider this as one move to the downside. We took out our hourly low at 1110, so I would still wait for a potential market structure shift right here from this level. Since we grabbed liquidity during that macro, took out our previous hourly low, a strong bearish candle, down close candle. We already got this buying pressure from this wick to the upside, 3 dojis prior to that. Let's see if we can get that market structure shift. Yep, we got that market structure shift, and I would consider to take that trade still, since we pretty much waited all session. We took out our previous hourly low. And when we started on this journey to find a turtle soup entry strategy or an ICT concept-based entry model, I would have taken this long right here from this level. Placing my stop loss 1 tick below that. This would have been my first target, targeting a 3-1. Just curious to see if it's playing out here, but we would wait for a... I hope that's fair to assume. Strong bullish reaction, pullback into fair value gap, market structure shift. So this would be our turtle soup setup after we took it inside of the 1050 to 1110 macro. We would now start to draw in our fair value gaps. The only fair value gap that we've got left would have been this one right here. We could also look at our displacement leg right here to the downside that shifted, that took out the slow basically. We had one right here, one here, so plenty of fair value gaps to look at. Let's focus on this bullish one and see if we would have gotten an entry. Let's see, so right now we would be looking at something. I'd say it would be depend on if we get filled to maybe take this entry right here. This would be our market structure shift. Let me look at that. Otherwise, we would place our limit order simply at the 61.8 with our stop loss one tick below that, targeting a 3 to 1.
So now I have a question actually.
Yeah.
Your FIP tool, doesn't it need to be pulled up all the way up to the
Yeah,
to there?
we could actually do that, but at this point in time, if we go back to the market structure shift, we could already see the pullback forming, and at this point in time, our FIP would very likely be looking like this. We see we have the only fair value gap that we have would be above the 50% level, so it would certainly not be an A+ setup. We could still try to place our limit order right on here, see if we get filled with our stop loss one tick below this low right here, or this old fair value gap. We could even place it right here at this low. It would still protect us from maybe a little wick that's going inside of this area, but it would ensure that we might get an entry here.
Yeah, plus it's after 11, right?
So yeah, it's after 11.
We do not enter. But
according to the rules, we do not enter, but I'm trying to see if we get a nice setup between the 1050 to 1110 macro, which we got right here. We took out our previous hourly low after 1, 2, 3 hourly bearish candles right here. We took out it for the last time, so hourly traders are still in short and they might have added to their short. And then we got this quick break to the downside with an immediate bullish rejection once we took out this hourly low, closing back inside of our previous hourly candle, left behind a fair value gap, filled this fair value gap, engulfed bullish out of this fair value gap, continued to shift market structure. Those are usually the types of setups where we do not get this deep retracement, because the goal of the setup is to quickly stop hunt the hourly breakout traders who entered short on this hourly candle, with the very likely placing their stop at the high of that previous hourly candle, which would overall be the target. I don't know if we actually reached it. I think we only reached inside of those fair value gaps right here. So yeah, we wouldn't take that trade unless it would have been an A+ entry, which meant it's going to retrace further than the 61.8. But then, of course, we keep on trailing it, but and then the 61.8 actually lines up perfectly with this fair value gap. But
in my backtest, I believe I entered.
Yeah, I think it's a fair point.
I'm not sure anymore, because I didn't like the overall price movement before 11.
Yes.
It wasn't doing anything, so I was like, okay, I wouldn't trade it live, I must say.
Yeah, I also think, I mean, we look at the macro at 11:10, and let's say we missed our entry here, or maybe, just maybe, this would have been enough to get our fill right here on this fair value gap, because we touched this level. And this could be enough to get our fill. We have our stop loss one tick below here. It maybe would have reached a 2 to 1. We would have been stopped out at break even. But this would now already be the next macro between 11:50 and 12:10. And I wouldn't stay in front of the charts for the 4th hour just to wait to get my entry. if I want, I would give it max until 11:30. If we get that 10:50 to 11:10 setup, but very likely at this time on Thursday, 18th of May, we already got a setup on ES. Let's have a look. 18th of May. Yeah, we already had a win. Let's see at which time. Right here at 9. We had our market structure shift at 9. With the market open, we held support in this bullish fair value gap. Very similar setup. We shifted market structure. That's the low of the day. We got our pullback into this low of the day level. That looks like the exact same setup. We also had a lower fair value gap, which would have been at the 61.8, but we saw all these rejection wicks right at the market open. I wouldn't have placed a limit order with the market open being where it is at 9:30, so I would have waited to see what the market open is doing. Then we had 1, 2, 3 rejection of this fair value gap once the market opened up. Then I might have entered on a rejection. Continuation move to the upside. We pulled back, testing this level once more with another big rejection right here before we reverse. So I'm pretty certain that we would have caught an entry right here around this level, even if it wouldn't have been a 61.8 retracement level. And if we would have measured then from our high to our low, our 61.8 could have been right around this level right here, where we reacted bullish. Yeah, no, so I wouldn't take this trade unless we would have maybe gotten that fill right here. It's outside of our session. Then we actually go into our lunch hour. Let's see what it did for the rest of the day. We dropped. Took out this low once more, consolidated around this low. So, yeah, nothing worthy to pursue. Even
I believe I entered, let me check where I did the entry, because it might have been a little bit earlier, and then I made a mistake then probably with reading the what's it called, the market structure shift. I have it here. Yeah, at 10:05 I entered.
10:05, okay.
Okay, my market structure shift, I think it, yeah.
This one right here.
Yeah, so that high that was created at the macro starting time.
Yeah.
Yeah, that one. I use that as a high that needs to be broken, but
okay.
Not sure why actually if I look at it now.
Now, oh, hang on, someone's calling me. Let's quickly cancel that call. Yeah, I watched price moving further down, but I wouldn't have counted this as a lower high within this market structure. We got very close to it right here with the market structure shift. We touched it, but we didn't go above it, so I wouldn't have considered an entry here. So now, overall, let me get rid of that turtle here. I mean, it's fair. Everyone is seeing a market structure shift. It's up to the trader most of the times. But that's great if we have a community we can discuss and, okay, yeah, now I wouldn't treat this as a market structure shift, and then you might wait a little, or even just taking a loss, it wouldn't hurt with a 3-to-1 risk reward. So far, we theoretically only had wins.
Yeah.
New York low of day.
All right, Matt, I really have to go now. So
no worries.
Session.
Yes.
And I will look it back when it's recorded because I'm curious to the next day.
Yes.
I have to go now.
I also will only do, I think, maybe 2 more days and then continue maybe later today, also record it, or tomorrow morning.
All right. All right. See ya. Bye-bye.
Yeah, take care. Bye. Okay, so we have our low of the day. We broke that low of the day. This would have been a simple silver bullet setup. Fair value gap right here. Filled, rejected. obvious entry, return into the low of the day. All right. So let's look at market structure. That's what we're here to do. We found a lower low right here. We're not going to see it with this first line. This would be our most recent high. This being our low. We shifted market structure right between this macro. Market structure shift bullish. Let's draw our fib and mark up our fair value gaps. This would be the one I would be focusing on. Low of the day, we took it out right here. So we redraw our fib first. Now to the high. And note we haven't taken out this buy side right here. One tick shy of it. Buy side. And our 50% level would have been touched, but no more significant fair value gaps right in here. We could have looked at a possible rejection from our most recent lower high. But let's see, this might just be a missed entry. Our last target would have been this high for buy side as well. We could look for a silver bullet entry. We might just get our optimum trade entry now. This would be the move. That's a 61.8. So fair value gap lining up with the optimum trade entry. Placing our stop loss one tick below that. Targeting a 3-1. Even though the structure before that is pretty rough. If this sharp drop to the downside, we will see if it's playing out. No, and it obviously hit stop loss. So I think it might be worth to add a parameter to it. If we already pumped so much, we shifted market structure right here, pulled back inside of the fair value gap. This took a little bit too long for my liking. Most of the time the setups that play out, they pull back and we get our entry straight away. And we don't have to wait for eventually market structure to shift once more to get our entry. This is not ideal. So I think we could also strike this out depending on what we saw right here. So this would have been the first pullback. We touched the 50% level. We wicked to it. 1, 2. But also a 3-1 wouldn't have been hit. Accounting for this low right here. Placing our stop loss one tick below that or right here. Targeting this buy side. A 3-1 wouldn't have hit. So this would have been at least a break-even trade if we get our 50% entry. But taking entry later on in the session or on this next move wouldn't be my type. So we could still keep on playing to see if we get another valid market structure shift, which we got right here. So this would be a new low that we just broke. There we go. I would get rid of this fair value gap. This is not valid for me anymore, especially since we broke it. We could now look at it to act as resistance. But we keep it simple, so low, high, the highest point between this low and this low right here would be those equal highs. This would be our market structure shift. And we don't have many fair value gaps to look at. This will likely be the rejection. We have equal lows below, typically not the best opportunity to short. Let's see if we get an entry or if price is just continuing to rally up. So we had our market structure shift. We hit those bearish fair value gaps, which likely would have scared us out if we are honest, trading live, that this might not work out, especially a pullback inside of the optimum trade entry. Eventually, we would have hit this level again for an entry, but this day would have, personally for me, just been a break-even day at least. Equal lows right here. Market structure shift entry would have hit a, not even a 2-to-1, depending on where we place our stop loss. I wouldn't place it right at the low, but yeah. Got one more market structure shift also during a macro. So we had reason to believe that this is going to reverse from here. A turtle setup soup. Turtle soup setup, not turtle setup soup. We took out our previous hourly low right here, and also the 8 to 9 a.m. low. We took it out, reversed, shifted market structure, but unfortunately never came back to get a good entry. Our overall target would have been these highs right here and this buy side liquidity. Let's see if that was hit later throughout the session. Yep, and we hit that. So this would have been the reversal point, but once again, we didn't get a good entry during that week. This being buy side. And yeah, this pretty much has been Wednesday. Alright, so that was Wednesday. And now let's have a look at Tuesday. Let me quickly open up Discord to see if there are any questions. Yes, I had to start it earlier because I also have some things to attend to later this morning. It's 10:33 now, and yeah, I will make sure that next time the event time is matching up, but I'm recording it, so there's not much to worry about. And yeah, so yeah, take care. That already was 45 minutes ago. So let's see. Let's do one more day, and then I also take a break, have some breakfast, and yeah. Let's see. We mark out our high of the day and low of the day. We can also, yep, nope, that's all good. High of the day, low of the day. Far out. New York, high of day. New York, low of day. We had this big rejection to the upside. We are very close to hit our low of the day, which would obviously be the draw on liquidity. We left behind a fair value gap right here. And this could have been a potential entry right here on this rejection wick. Placing our stop loss a few ticks above that. Targeting a simple 2-to-1. Wouldn't have worked out. Interesting. Reversed. So we would wait for our low to be taken. This would still be our draw on liquidity. Alright, we just took it out. Our most recent high would theoretically be these equal highs. We haven't taken out the 830 high just yet. Those are the levels we're currently watching. Ideally, we would like to see price break down further. Make a new lower low. Maybe during the macro. Yep, we got it. Right in that macro time, we took out this low. So now our highest point would be this high right here between those lows. Let's see if we continue to break some lows. Doesn't look like it. We're also outside of our session, but let's keep track of it. We took it out once more right here. We shifted market structure right here. That's our low of the day. We look for a fair value gap entry between the high and the low. Also inside of a macro. new hourly candle, that setup would have already passed and we wouldn't have received an entry. Very simple. Alright, so no trade entry for us on this trading day. It's Tuesday. Let's finish off this week so I can fill out the spreadsheet. Alright, so 8:30, our high of the day is sitting right here at this level, which would also be the London session high. Equal highs as well. Quick pump above that. I wonder if we had some news going on there. Let's see. We continue playing. Our market structure shift would happen once we break high, low, this low right here. We could also check the higher time frame for that quickly. Yep, this would be the market structure shift on the higher time frame. Let's maybe check the 2-minute if we, no, that would be it. Okay, it took quite some time and formed 3 equal lows before we actually would have taken out this low. To be honest, we had our first break of structure after this pump. We had big rejection mix to the upside. This would have been a break of structure where we would have liked to see this being a short-term low, filling this fair value gap, reversing and continuing to the upside, but we failed to make a new higher high right here, and we took out this low. So it is a valid break of structure, but not a market structure shift. And yes, there's a difference. Let's see. We kept on rejecting from this level. That's when we shifted market structure. So we could have placed our entry right here. Let's see, from our high to our low, that's perfectly at the 50% retracement level. So let's place our stop loss 1 tick above this high. Target a 3-to-1 risk to reward ratio. And our take profit target would have been hit. I would still consider taking this trade as we just consolidated sideways. We took out those 3 equal lows. We've been rejected here again, and we have enough room for this for price to even have a wick to the upside. We even prepare for the optimum trade entry potential, and very likely the shorts are already trapped above these equal highs. We consolidated sideways, pretty much mirroring the movement we had prior to 8:30 before we break down. We get our setup right inside of our, if we want to, inside of our macro. We would have expected something to happen. We left equal highs behind in the end of the day. But yes, I would treat this as a valid entry. I hope everyone can agree. And Matt also has his entry right here. I think that would have been a safe play during the live stream.